How much do you actually need to buy a house? Most people guess a number, assume it's out of reach, and never start saving. Today, I'm giving you the real answer, broken down by every single cost you need to plan for, including the ones nobody talks about, until you're sitting at the closing table wondering where that charge came from. I am a licensed real estate agent, and I have watched buyers get blindsided by the cost they did not know existed. This video is so that does not happen to you. Let's get into it. Hi, everyone. Welcome back to the channel. I'm Shondy. If you're new here, I'm a working mom of five. I have a 9 to 5, and I'm a licensed real estate professional. Every Thursday, I break down a real estate topic in plain language. Today's question is one I get asked often, which is how much do I actually need to buy a house? And I want to answer it completely because there is not one number, there are several numbers. And if you only plan for the down payment and forget the others, you will find yourself scrambling at the worst possible moment. So let's go through every single cost so you know exactly what you're saving towards, okay? The first number everyone thinks of is the down payment. This is the upfront cost you bring to the purchase, and here's the most important thing I can tell you about it. You do not need 20%. Of course, that is a myth. I have said this before and I will keep saying it because the 20% myth is the single biggest reason people delay buying a home for years longer than they need to. Now, here are your actual options. You have that conventional loan, which is as low as 3%. Now, on a $250,000 home, that is about $7,500, not 20% though. Let's say $7,500. Now, on the FHA loan, that's usually about 3 to 5% down. FHA loans are backed by the Federal Housing Administration and are designed for buyers with credit scores as low as 580. On that same $250 home, $8,750 down is usually how much that is. So $8,750. Okay. Now on the VA, that's 80. VA is 0% down. And if you or your spouse are veterans or any active duty military, you may qualify for a VA loan with zero down payment. Uh, let's say zero, keep in mind. Now, this is one of the most powerful financial benefits available, and a lot of people do not use it. Another zero down option is USDA loans. Now, USDA loans are properties that's eligible for in rural and suburban areas. If the home you're buying qualifies, then you get that zero down payment that's required, right? So, what does that down payment actually look like? Let me show you the numbers at three price points. You have a $200,000 home, and that is 3% of the conventional would be about $6,000, right? Or if you did 3.5% for FHA, then that gives you about $7,000. Now, if you did that 20% conventional, as everyone always saying you need 20%, that'd be $40,000 on a $200,000 loan. Now let's look at the 300,000 number. So if you had a home that was $300,000 with a 3% conventional loan, that's $9,000 that you'll need for your down payment. The 3.5% for FHA, that'd be $10,500. And then if you have to have that 20% conventional loan, it's $60,000. That's a lot. Now for that $400,000 loan, if you did a 3% convention on that, that's $12,000. And if you did a 3.5% FHA, that's $14,000. Now, if you do a 20% conventional, that's $80,000. Do you see how different those numbers are? That 20% number that lives in everyone's head is 3 to 7 times higher than what you may actually need. So again, you may only need that 3 to 3.5%, and look how lower those numbers are for you. Now, there is a trade off to putting down less than 20%, right? Or putting less than 20% down. If you put down less than 20% on a conventional loan, you will pay something called PMI, which is private mortgage insurance. This is a additional monthly payment that costs typically between 1% of your loan amount annually. Now, if it was a $250,000 loan, that's roughly about $100 to $200 per month added to your payment. PMI goes away once you reach that 20% equity in the home, either through paying down the loan or the home appreciate in value. So is PMI worth it to get to into a home sooner? For a lot of buyers, yes. That is a personal decision, but at least now you know it exists and you can plan for it. Now, with closing costs, this is the cost that catches buyers off guard more than any other. You have been laser focused on saving your down payment, right? You hit that number, you are ready. Then someone hands you a closing disclosure showing you owe an additional 8K in closing costs. This happens all the time, and it does not have to happen to you. Closing costs are fees associated with finalizing your mortgage and transferring home ownership of that property. They typically run between 2 and 5% of your loan amount. So on that $200,000 loan, that's roughly around 4K to $10,000. Okay. Now on a $300 loan, that's roughly about $6,000 to $15,000. Now let me break this down. What actually is those closing costs so that they are not a mystery to you. So with this loan origination fee, what the lender charges to process your loan is what that is, and it's usually around 1% of that loan. Now, next you have the appraisal fee. That appraisal fee is just the cost of having a licensed appraiser assess the home's value. That typically costs about $300 to $500. You also have a title search and title insurance. This is verifying the seller actually owns that property free and clear and insuring against any future claims. This usually is about $1,000 to $2,000. Okay. Now, with the attorney fees, that's depending on your state because some require an attorney, a real estate attorney, and some you have like an escrow officer at closing. So, but these fees vary, but typically could be around $500 to $1,000 as well. Now, you do have to pay prepaid interest. You pay prepaid interest from your closing date to the end of the month up front, and it really depends on that loan amount and your rate. Next is the homeowner's insurance premium. Your first year of homeowner insurance is often paid at closing, typically $1,000 to $2,000 depending on your home and their location. Now, next you have the property tax escrow. Your lender may require 2 to 3 months of property taxes up front to fund your escrow accounts. Lastly, you have recording fees. Now, the county charges a fee to record the deed transfer, and that usually run a few $100s. Now, can you negotiate those closing costs? Sometimes, yes. You can ask the seller to cover some or all of your closing costs as part of the offer negotiation. This is called a seller's concession. In a slower market, sellers are more willing to do this, but in competitive markets, it is harder to ask for. So it's just really depends on how that market run, or depends on how nice those sellers are. You just never know. Now you can also shop lenders. Fees vary between lenders, and comparing maybe 2 or 3 loan estimates can save you thousands. I definitely recommend at least having 2 different lenders to compare their fees and stuff. And I know sometimes when you have a first time, not a first time, but when you have a new construction home, most times they just have their lender already there and they give you all of these incentives or concessions that they can give, like may cover all of your fixtures in your home for you, may give you a certain amount of down payment for it, cover that for you. Like they may help you out, but just check with another lender too that's not attached with the seller to see if they can do something even better. You just never know. So I feel like the lenders that work with the new construction are really focused more for the sellers, which is the builders, right? So definitely always try another lender. Always get two or three to help and see. Now the bottom line is you want to plan for 3% of your purchase price and closing cost minimum. You have that money ready in addition to your down payment. So remember, when we're closing the home, it's not just the down payment that we need. We also need closing costs. So when your offer is accepted, you will put down an earnest money deposit. It's also called a good faith deposit. This is typically about 1 to 3% of the purchase price. The important thing to understand is that this money is not lost. It goes towards your down payment and closing costs at closing. But you do need to have it available immediately when your offer is accepted, usually within 1 to 3 business days. This is not money you can scramble to find. It needs to be like liquid and ready. Now, on a $250,000 home, that runs you roughly between 1 to 3% of the purchase price. So I would say that the 250 for that 1 to 3, that's about 2,500 to 7,500. Have that available and accessible the money you start making. Oh, sorry. Have that available and accessible the moment you start making offers. Okay. Now you also have before you close, there are a few more costs to plan for, which is called pre-closing costs. And the list of those will be a home inspection. This is when the licensed inspector walks through the entire property and documents its conditions. That typically costs about 300 to 500 depending on the size of the home. You pay this directly to the inspector, usually the day of inspection. Now, this is not optional. Do not skip your home inspection just to save some money. The inspection is what protects you from buying a home with serious undisclosed problems. So you definitely should always get an inspection. And I'm going to say this again, even with new construction, because they will tell you don't need no inspection, just go with what they already had inspected. Get your own. Now, they may not fix everything, but at least you'll know what may need to have, or have that time to opt out if you want to as well, because you got a hefty down payment for new construction. Now, you may have pest inspections. That's some lenders require this, especially for FHA and a VA loan. And that's usually like if you're in a like termite area, they may ask for a termite inspection. It's typically about $100 to $200, not much. And then you have any additional inspections. These depend on the home and your situation. You may need a separate roof separate roof inspection. You may need a sewer scope, a radon test. Each costs about $100 to $400. So plan for about $500 to $1,000 in inspection costs total. Two more costs that people forget to include in their home buying budget, and one is moving costs. Whether you hire movers or rent a truck, you plan for $500 to $2,000 depending on the distance and the belongings. Okay. Now, you want definitely depends on how far moving and how much stuff you'll have. So those two will matter. Now, with the immediate repairs and updates, even a move-in home or move-in ready home usually has something in the first few months, a new lock set, maybe a shower head. I know we changed our toilet seats for every bathroom. You may want to paint for one room. You may want to get a light fixture. So for things like that, you want to budget about $1,000 to $2,000 for small immediate needs. Now I know this sounds like it's a lot on top of everything else, but being prepared means you are putting a plumbing repair on a credit card. Well, means you're not putting that plumbing repair on a credit card the week you move in. So you just want to make sure you have the money. You want to make sure you're well prepared. So it's nothing like having that extra funds saved up for that. Okay. Okay, let me give you the real number now. Everything together. I'm going to use a $250,000 home as your example, or as our example. So we got 250,000 down. Now, if we do the down payment at 3.5%, that's FHA, right? That's about $8,750. We can do closing costs at 3%. That's about $7,500. And then we have this EMD, which is the earnest money deposit. That's applied at closing, so it's already counted right here in your closing costs. Now for home inspection, that's $400. Let's say moving costs us about $1,000, and any immediate repair buffer we saved at $1,500. Total cash you need ready on a $250,000 home is $19,150, and that's approximately right. That's just an estimate. Now let me show you this at different price points. On a $200,000 home, that's approximately $14,000 to $16,000. As you can see, on a $300,000 home, that's approximately $22,000 to $26,000. And then lastly, on a $400,000 home, that's approximately $28,000 to $34,000. And that's just the money that you may need to close, right? Is that number more or less than you thought? Yeah, that's a lot, right? These are real numbers, not best case, not worst case, realistic planning numbers. Here's the question, what we already went over. But here's the thing, for a lot of people, it is less because that 20% made it feel impossible, right? But when you have that 3 to 4% down, it's not impossible. It's like a saving goal with a real timeline. So I ask you that question again. Is that number more or less than you thought? All right, before I wrap up, I wanted to make sure you know these exist because not a lot of buyers know this. You have down payment assistance programs. These are called DPA programs. There are grants and low interest loans specifically designed to help buyers cover their payments and sometimes closing costs. These programs exist at the federal level, the state level. You have the local level. Many are specifically designed for first time home buyers, low to moderate income buyers, or buyers purchasing in specific areas. Some of these programs are grants, meaning you do not pay them back. Now, how do you find them? Start with your state's agency, your state's housing finance agency website. You're going to search your state's name and your housing finance agency. So, for instance, I'm in Tennessee. I'll just search Tennessee and I'll put Tennessee Housing Finance Agency, and it should bring up a couple of programs for you. Now, also ask any lender you talk to specifically, right? What down payment, you want to pretty much ask them, what down payment assistance programs do I qualify for? A good lender will know what is available in your market. So definitely ask the lenders. You do have these two options to look for that. Now, I have worked with buyers who thought they needed about 15,000 saved and found out that they did qualify for a program that covered most of their down payment. The money is out there. You just have to ask. It's there. Just ask for it. All right, so here's a summary. To buy a house, we're going to break that down quickly. You just need a down payment as low as 3 to 5%. We determine you need closing costs, which plan for about 3% of the purchasing price. You have inspection and pre-closing costs, which you need to plan for about $500 to $1,000 on that. And then moving and immediate repair buffer, plan for about $1,000 to $2,000. That total is somewhere between 3 to 7% of the purchase price, depending on your loan type, your market, and your specific situation. Now, if you want to go even deeper on the home buying process, I do have a complete first time home buying walkthrough on this channel. I will link it in the description below. Now, drop your question in the comments. How much are you currently saving towards your home? No judgment. I just want to see where everyone is starting from. Subscribe for new real estate education. I have it every Thursday, and then I have income content every Monday. But I'll see you on Monday. Thank you guys for watching. If you have any more questions, you drop them in the chat or even shoot me an email. My email is cashonda.harris@gmail.com, and they'll be in the description as well. Bye.